I want to go live now to Ed Boyd. We are waiting for these September quarter inflation figures to be released momentarily by the Bureau of Statistics. Ed, our business reporter, joins me now. Ed, headline inflation expected to increase to 3% during the quarter.
Yeah, that's the expectation from economists, Trudy. We're going to get the numbers in about 15 or 20 seconds. But what is inflation? It is basically price increases, how much things have gone up in cost over the September quarter, which are the numbers we'll get today, and at an annualised rate from September 30 last year until September 30 this year. The figures have just come through from the Bureau of Stats. We can see at an annual rate, inflation has gone from has gone up to 3.2% at headline number. So that is slightly stronger than expected. Over the 3 months, inflation increased by 1.3% at a headline rate, bringing the annual increase, yes, to 3.2%. So inflation slightly more than what the market was anticipating. The key figure to look at is the trimmed mean, which is the underlying inflation number. The expectation was it was going to come in a bit high at 2.7. It was going to come in at 2.7%. It's actually come in higher than that at 3% for trimmed mean. So these are they're not the best numbers here, looking at them from a Reserve Bank's perspective. Just going to bring up the latest media release here from the ABS. They say consumer price index was up 1.3% in the September quarter, 3.2% annually. This is the highest quarterly rise since March 2023. The largest contributor to this quarterly movement was electricity costs, which rose by 9%. Remember, we've had a lot of electricity rebates. They are now coming off. So electricity prices surged 9%. You can see quarterly inflation going back to 2018. The peak was in December 2022, where it was 7.8%. It's bounced around a bit, but I think this is a little bit concerning for the Reserve Bank and for economists, seeing inflation now go up to 3.2% headline and 3% at a trim mean level. Just reading a bit more of the media release here. Annual inflation was 3.2%. This is the highest annual inflation rate since the June 2024 quarter, when annual inflation was 3.8%. Trim mean annual inflation, the figure the Reserve Bank watches, was 3% to the September quarter, up from 2.7% to the June quarter. This is the first time trimmed mean annual inflation has increased since December 2022. So not the best figures to be looking at, if I'm honest with you, Trudy. Quarterly CPI inflation, the main contributors were housing costs up 2.5%, recreation and culture up 1.9%, and transport up 1.2%. Now, a bit more on electricity. So the rise in electricity costs, up 9%, was the big contributor to housing inflation. It's part of the housing category. Now, they say there were two main contributors to the quarterly rise in electricity costs. Number one, annual electricity price reviews came into effect from July 2025 and increased electricity prices across all capital cities. And number two, the timing of when some households received their rebates has also had a big impact. There were Commonwealth rebates were extended from July to December 2025. However, households in New South Wales and ACT did not receive payments of the extension in July. So basically what we're going to see here is potentially inflation numbers bouncing around a bit as these electricity rebates go into the economy and back out of the economy. But just recapping, trim mean inflation has accelerated to 3%, which is a concern, and headline inflation has accelerated as well, up to 3.2%, Trudy.
And Ed, we knew that the Reserve Bank was waiting for these September quarter figures. They're just much more reliable than that monthly read that we've been having. I saw the governor earlier in the week talking about that core inflation number. She said if it was a 0.9% increase, that would be a material miss in terms of these figures. And as you've said, that number's gone up beyond that. So how do you think the Reserve Bank's going to react to this number?
I think the Reserve Bank's going to be a little bit worried about where inflation's at in the economy. Here's the rate cut odds. So before the numbers came out, the chance of a rate cut was at the bottom of the screen there, was 41%. This is for next week, for Tuesday, for Melbourne Cup Day's rate call. After the inflation numbers have come out, you can see the chance of a cut has fallen to just 12%. So clearly the stock market thinks the Reserve Bank is now going to hold interest rates next week at 3.6%. You can see here, the market was basically flat before the inflation figures came out today. It's now dropped pretty substantially. It's now down 0.6% in just a matter of minutes. We should be able to see the Aussie dollar jump off the back of these figures. It's gone above, it was just a second ago, it was above 66 US cents. There you go. So the Aussie dollar always reacts in inverse. And the next figure should be the one-year bond yield as well. And that has risen as well. It's going towards the 4% level. So from the RBA's perspective, they're clearly going to see these numbers and think we need to keep interest rates on hold where they are at 3.6% and hope that inflation starts to creep back down again, back into their target band. But remember, they need to keep inflation between 2% and 3%. That's their mandate, and they're aiming for the midpoint of that band. So really, they want trim mean inflation at about 2.5%. And right now at 3%, it's a bit high.
And Ed, we've been talking for some time about the change in the way that the Bureau of Statistics is going to some of this data. Talk us through that in terms of the impact for the quarterly number.
Well, basically today is the final day that the ABS will be releasing the quarterly CPI numbers. So from next month, on the 26th of November, we will get the monthly inflation number. And that's all we are going to get from now on. So in the background, they've been working on a project for a couple of years where they're trying to make the monthly inflation number as accurate as the quarterly number, where they read everything in the basket of goods that they measure to measure inflation. Previously, the monthly number was very volatile. It only measured about 60% of that basket of goods. From next month, according to the ABS in their media release, that is going to be accurate, and that is all they will be releasing in the future. So from the RBA's perspective, they don't need to wait until this quarterly figure comes out before making a strong call around the cash rate. They can see the monthly numbers now and react accordingly. So what we should get in the future is a position where the RBA will have more accurate readings of inflation, and they'll be able to make interest rates decisions on a month-by-month basis, as opposed to right now, where they might need to sit on their hands and wait till the quarterly figures to come out to make sure that inflation is heading in the correct direction. So we'll get those numbers from the 26th of November next month.
Business reporter Edward Boyd, appreciate your analysis. We'll let you go and dig into these numbers more closely.